traders, my name is Gregor and welcome to a new video analysis. And today I will give you an update on dollar yen, crude oil and the S&P 500 futures market. On dollar yen, as you know, we are tracking bullish period here. In wave C within a larger expanded flat correction, so we are expecting higher prices here. We are tracking now first leg within this 5-wave rally in wave C. So on a daily chart we have seen very slow, very choppy price action for the last 2 or 3 months, which I think represents a corrective wave 4. As you know, 2 days back we highlighted this triangle pattern in ABCDE, which is a 5-leg pattern. Now we already have here 5 legs, so actually maybe this triangle is near completion. Okay, however, as always, we need a confirming price action, which means that if this wave E low has formed here, then of course I need some evidence of an impulsive rise through this upper trend line of this pattern. Okay, so if we get a decisive break through this through this resistance with a daily close above this level, then I will be quite confident that we are heading higher in wave 5 of larger degree of a black wave 1. Okay. So for now it's still too soon because the price is actually still trapped within this range. Okay, so on the 4-hour chart, actually this fall was quite sharp, but still it can be wave E. I have seen many times before that wave E was very fast, quick and sharp, and then market just reversed in the opposite direction. Okay, so this could be a wave E. We are also above this rising trend line of this lower support line of this pattern, so maybe we will see a continuation higher. But as I said, I want to see an impulsive rally, ideally from the 78.6 and 61.8% Fibonacci retracement area. We can also see here a former wave B that reacted as a nice support, so I would love to see a continuation higher, as I said, in an impulsive fashion, with a daily close above this trend line and as well as above this wave D high. In such case I will be looking for a straight move to the upside. So because actually we still do not have this confirming price action, I cannot know for sure if wave 4 has finished. We of course need to consider different scenarios. So I'm here also tracking another wave count, which again is a corrective price action, but we could see a little bit more complex situation in blue wave 4. Here I'm tracking also a triangle, okay, but that's a triangle in wave B, not wave 4. Okay, but important is that this wave count and also this wave count, both counts are corrective. Okay, so we are tracking a corrective price action, a contra trend movement within a larger uptrend. So sooner or later we will see a continuation higher on dollar yen, but firstly we need to identify end of a corrective wave 4. So this is the second alternate count that I'm tracking. As I said, the wave B triangle. If this count would prove correct, then of course we need to see a decisive push through the lower side of this pattern, okay, and a daily close below this swing low. In such case I would look for an impulsive decline in wave C, maybe even back to the previous 4th wave. If we will see push to the upside, then our primary wave count will be confirmed and I will be ready to track a wave 5 to the upside. So for now it's still too soon. We are trading very tight here. As you can see, the ranges are very tight, so I think that sooner or later breakout will occur, and it's better to wait on a breakout, to wait on a confirming price action before you go with the market. Okay, and now let's take a look also on oil. On crude oil we have seen a very sharp move to the upside. First let me check the updated weekly count. If you recall, in our past updates we were tracking huge wave B triangle. Okay, we were looking for an A, B, C, and we thought that we are now trading in wave D and that we will go more sideways here. However, we can see that prices spiked above this wave B, so obviously that wave count has been invalidated, okay, which means that we put it now new alternate count, previous alternate count in play, and this count suggests that actually wave B has ended here, which was still an ABCDE triangle, but a little much smaller than we were tracking it lately. So now, because we are here above this wave B, I think this market is trading higher already in wave C, so I expect to see a continuation through this wave A swing high back from 2010 and 11. Okay. Also, here I can see some nice impulsive price action. I think this was wave 1, wave 2, and now a 5-wave rally underway within this wave 3. Okay, so here on a daily chart we are tracking this wave 3 a little bit closer. So let me label this wave 3 real quick here. Wave 3, as you know, also needs to be subdivided by 5 waves. So we are tracking here wave 1, wave 2, and extended wave 3 of wave 3. So we have room for much higher levels here within a blue wave 3. Now we need to focus on a one wave at a time, which is this leg. Okay, it's the final part of this red wave 3. So we expect to see a little bit higher levels here, possibly test of 261.8% extension of this red wave 1. I expect to see a test of these levels, which would also mean that we will see a push higher, which means through these highs and then a reversal to the lower. Okay, this would be a very nice psychological game from the market. Okay, so I expect to see a push higher here up to 115, maybe 116 mark, and then watch for a corrective retracement. Now it's also important to understand that here we had a triangle placed in wave 4. We know that triangle occur prior to the final move of the larger pattern. Okay, so this breakout is our final leg within a larger pattern, and larger pattern is this 5-wave move. Okay, so this is one pattern, it's an impulsive structure. So if this move will be final, then we know that correction will follow. But based on Fibonacci projections, I think that we could see higher levels here within this black wave 5. So here on the 4-hour chart, I labeled end of a corrective wave 4 triangle here at 105.50. From here we have seen a first impulse up, which, if my count is correct, if prediction is correct, it's first leg in this black wave 5. Okay, so we need 5 waves to the upside from here. Now it's very important also that we have seen a strong push higher through these resistance levels. Okay, and we know that when resistance is broken, then this resistance will usually react as a support when the pullback will occur. Okay, so if this was a resistance zone, stronger resistance zone, then this is now very strong support zone that could send prices to the upside. Okay, that's why I'm tracking this potential scenario of much larger black wave 5. Okay, so I'm looking higher here, and keep an eye on a pullback when we go to these levels, let's say around 108, because an impulsive reversal to the upside will indicate further strength on this crude oil. Okay, if of course market will reverse to the downside in impulsive fashion and go through this wave 4 floor, then obviously we will call end of a wave 5 here, and in such case we will look for a larger free wave of retracement. Okay, but for now, because the market is in bullish mode, because we have seen a decisive break above these resistance levels, I of course will continue to look higher for higher levels within this black wave 5 of red wave 3. Okay, and now let's take a look also on the S&P 500. On the S&P 500 I made small adjustments regarding these wave levels, but actual the general outlook is the same. we are tracking a larger degree of impulsive structure in blue wave 5 after we identified and labeled end of an expanded flat in wave 4 here. So we are now tracking a 5 wave advance. We are tracking this black wave 3, which is extended lag, okay, which is still incomplete, but based on a daily chart it seems that we are in a 4th wave pullback that is part of this black wave 3. Okay, so I think we will see deeper levels here, and then again we will see another push higher to complete this black wave 3, because it needs to be subdivided by 5 subwaves. So on a daily chart is the reason why I think that we are going lower here in a corrective retracement. I can see an impulsive sell-off here. Actually this is better shown here on the 4-hour chart. We have waves 1 to the downside, wave 2 pullback, extended wave 3, sharp wave 4, and wave 5 to the downside. We have already seen a push to a new low, which means this is a 5-wave move. Okay, and if you identify a 5-wave move against the larger trend, then you know that something is changing. In our case, we need to see a 3-wave retracement, okay, because even if this is corrective pullback, which I believe it's a wave 4, it will be a wave 4, we need 3 waves to the downside. This will be a red, A, B, and C. Okay, just a second. Red, wave A, wave B pullback, and wave C. So I think we are now in wave A. Wave A is a motive wave, which means it must be made by 5 waves, as I said on the 4-hour chart. Actually, I think I will have to rework these numbers here, I mean colors. But anyway, as you know, wave A is a motive wave, which means it must be subdivided by 5 waves. We have 5 waves here. Maybe we'll see a little bit lower levels here, 16, 15. This is a nice region of support. We also can see already some signs of a bullish divergence, so sooner or later prices will form some support here and retrace higher in wave B in 3 waves, okay, because we know after every 5-wave move correction will follow. So keep an eye on reversal signs, because we will see this pullback, and ideally when corrections occur you will tend to see a retracement back to the region of a previous 4th wave, which is here. Okay, so wave B can retrace all the way to this level, 1670 maybe. Okay, now here on the weekly technical chart, always when some larger corrective retracement has occurred, we have seen a test of this 50-period moving average. That's on the weekly chart. Okay, so maybe if now the larger correction is underway based on the Elliott wave count, then I would not be surprised to see another test of this 50-period moving average. Okay, we also have here divergence, so actually I would not be surprised to see deeper levels here, and our wave count is confirming this. Okay, here on a daily chart we can see that prices moved well below this 50-period moving average. Okay, it also reacted as a resistance here, and now when we have 5 waves to the downside, and as I said we expect a 3-wave bounce in wave B sooner or later, then I will again look for a reversal to the downside from this 50-period moving average. Here we also have seen a very decisive fall through this 50-period moving average, but notice that this was only a 3 waves of decline. Okay, so actually that's the reason why this 50-period moving average did not react as a resistance here. Okay, so this time is different because we have 5 waves of decline, not 3 waves of decline, so I expect further weakness here. On the RSI, we can see that reading was very low a few days back. We have fallen down to 30 level. and this is indication that stocks are in temporary bearish mode. So if that's the case, then any retracement back to 50 will be only temporary, and ideally this will be wave B based on our Elliott wave model. Okay, and then we will see again a reversal to the downside. So for now, stocks are in bearish mode because we have 5 waves to the downside, and expect more weakness because we need 3 waves to the downside. Okay, and this weakness will resume after a 3 wave bounce, which could occur in the next few days. Okay traders, that's it for now, and I will catch you with further updates on our intraday updates page. Have a good day.